Welcome to the Business Advisor Hot Seat. I'm George Sandman, founder and CEO. And in the hot seat every week are senior pros like you sharing their tips, tricks, and techniques for delivering client wins. So we're going to cover a lot of the methodology and process that's it's in my book, The Growth Driving Advisor. So if learning how to be better at doing what you do, learning what others are doing is important to you, listen up, strap in, and let's go. Well, welcome, ladies and gentlemen. And today I am here with Christine Hollinden. Christine's in the hot seat. Christine is a strategist. We've been friends for countless years, since the beginning. And Christine, rather than me, why don't you please describe what you do, why you do it, and why clients hire you?
Awesome. George, great to be here today. So Christine Hollinden, and I'm the principal and founder of Hollinden. We are growth without guesswork is our mantra. And that means we work with professional service firms, middle market firms that are looking to grow across accounting. We also work with investment banking firms, portfolio companies, the private equity firms, those and financial sector people. Those are the kind of clients that we work with. And clients hire us, one, for strategy.
Yeah.
How are we going to get there? What is happening in our industry? How are we going to get through this? What are we going to do? How do we come out stronger, better, faster firms, more efficient, more effective? And how do we build in whatever industries we're in, whatever community, whatever region or geographic region that we're in? So that's who we are. I'm happy to be here. I'm a little bit of a different marketer strategist in that I'm also certified in exit planning, in value growth, in mergers and acquisitions, and soon to be a new
C3D.
right. So in growth drive and certified. So very excited about that. But I look at things a little bit differently. So I think a lot of what happens in marketing in these kind of firms is that they do stuff.
Yes.
They produce a lot of content in social and e-marketing and do some web things, and that's fine, but it only works and it only makes a difference if you really know what the strategy is and what the plan is to get there, and you're flexible enough to adjust as things change.
Heck yes. I think you hit the nail on the head, Christine, and we'll turn to the topic at hand here in a sec. But when I think of you as a strategist. And the fact that you are also incredibly gifted at marketing is important, but it's the strategy. Where does this, and let's pick on, we're going to talk about accounting firms. Where is this industry going? Where does this firm need to go to capitalize on the direction, the wins that the industry is starting to see? And once we understand where we're going and the strategy to get there, then we're going to talk about client acquisition. But right now, there's probably a tremendous opportunity. Well, you're a strategist, and I love it. You always have been, which is why we got along from that very first we met, at an AICPA valuation event 14 years ago, something like that. A long time ago. Yeah, a long time ago.
Yes. And just so everybody knows, George and I were at booths side by side. And as people started coming up, and one thing we noticed was that the two of us were standing in front of our booth out talking to people, engaging, while others at this conference, other exhibitors, were sitting behind their booth, and many of them head down in their laptops. And we kind of looked at each other, okay, kindred spirits here.
Yeah, absolutely.
And then during kind of downtimes, we learned about each other, and we learned enough so that if we were talking to somebody and they really needed growth drive, or if they needed strategy and marketing services, we could refer each other, and we were introducing people right and left.
Yeah.
It was a fantastic dynamic from the get-go.
Absolutely. And it has been, and it's been fun. We've done a bunch of work together. Well, which brings us to why are we here today and what do we want to talk about? So Christine and I, one of us reached out to the other a couple of months ago, and I think doesn't matter. One of us pinged the other, and we ended up having a 2-hour long conversation about accounting on about the revolution that my word, not yours, but the revolution that is taking place inside the accounting industry and profession. But let's focus on the industry and what's happening with accounting firms. And we just went and we're doing a series of shows together. We just, thank you. I was in your booth at Accounting Today's excellent firm growth forum out in San Diego. A lot of takeaways. And we're going to talk, that's what we're going to talk about here. And then we're going to be together at Engage, AICPA Engage in Vegas here in a couple of weeks. And we are going to be together at GGI, right?
Right.
We are going to be hopefully side by side. I need to tell Tabitha at the AMNAA. So, and everything I just referred to, except for the AMNAA, I'm there supporting you as a strategist. And we'll talk about why in a sec.
And I'll be at the Growth Drive.
Yes. And you, of course, you're going to be.
Yes.
Of course, you're going to be at Growth Drive. Yeah. The Growth Drive Summit, October 6th, 7th, and 8th here in beautiful Charleston, South Carolina.
Yay.
And Christine is a sponsor. Thank you very much.
Happy to do that.
Yeah.
So big news this week, George, in the accounting industry. 2 big announcements. The state of Illinois, the state society in Illinois, announced 2 new pathways for people to become CPAs. Now that joined more than a dozen other states across the country who've introduced 2 or 3 new pathways to become CPAs. So previously, just so everybody knows very quickly, what they had done was said to become a certified public accountant, you had to have 150 college credit hours, and they had specific things. You had to take a certain amount of college courses in accounting, obviously. And in many cases, that meant you had enough credits for or in most cases, you had enough credits for a master's degree. So a lot of programs at the university level started what's called a 5-year program in accounting. So if you majored in accounting, most students went 5 years, got out with 150 credit hours, and got an undergraduate and a master's in accounting or in taxation, things like that. And then they were eligible then to start studying and sit for the CPA exam after 1 year of service, being in an accounting firm, working in accounting. And the industry as a whole has seen for numerous years the number of accounting graduates decline. Started to slowly decline over time, and then it just started, where some estimates gave the number of accounting jobs that compared to the number of people entering the field at 100,000 gap.
Yes.
So, they were looking for 100,000 more accountants than there were graduates in those fields. And obviously a staffing gap, you can't grow if you don't have people to do it. Right. So they started looking at, what do we do? Do we adjust? Is it the 150-hour rule that's holding people back? And certain state societies started changing the pathway.
Yeah.
And Illinois announced earlier this week that they were changing their rules and giving 2 pathways. And then the other thing that happened is both the AIC...
They're making it easier to become a CPA. Yes.
The other thing that happened is the AICPA and NASPA announced 1 new pathway, and that is 120 credit hours, which is what it takes to get a bachelor's degree, and 2 years of service. And then you have to pass the CPA exam, obviously.
Yeah. They haven't lowered that standard at all, just to be clear. Yeah.
You have to pass the exam. That's a given.
They're just making it easier to get to the exam table.
So it doesn't preclude that. It doesn't exclude that. Now, some states, societies, what's exciting is they've said, wait a minute. There are a lot of other majors out there who get a lot of accounting, and they are very, very smart people. And if they come to work in an accounting firm, they can take the exam without majoring in accounting. And so they're looking at broadening, finance majors, other kind of data analytics majors, you name it, business majors. And so there are a few states that have said there's 3 pathways. So the 120 hours, the 150, or business, any major
Sure.
with work experience, then all of them must pass the CPA exam. What we went out to our clients with and our audience with this week is said, this is an opportunity. Oh, and I forgot one thing. What was really interesting about this announcement from Illinois and joined the
I was
ranks of
about to
other
ask.
states
Yeah.
is that they said there it is easier for those with licenses from other states, so
Yes.
reciprocal states, to practice in their state and vice versa. So what that means is you don't have to, if you work in Texas or Illinois or vice versa, you don't have to then pass the other state's CPA exam in that state or go through the licensing process in that state if they're a reciprocal state, which means that you can then cross market. So it's expansion opportunities. It's opportunities to recruit. It's opportunities to expand their firms. There's a ton of opportunities there. And
we're seeing this play out nationally.
It is playing out at the highest levels. And predictions are that other societies will follow suit.
Yeah, you have to, from a competitive, if you're a state, you're in the state CPAs, and we'll be out at the Cal CPA event. It's interesting because you and I saw that play out. Let's get to San Diego. So in San Diego, about Dan Hood and the Accounting Today team put on a fabulous event. If you like to geek out about what accounting firms are doing to increase their reach and relevance, to grow, we had the winningest firms in the nation. We're all in the room, along with strong presence of private equity and a lot of technology partners were there as well.
Absolutely.
Maybe I'll start with if there's one thing you're like, the one thing I learned was.
So I think everybody's focused on growth.
Yes.
One way or the other.
Yes.
And I think the thing that struck me the most was that there's really two camps in growth. And it doesn't seem to be many in the middle. And that is the camp that says we are proactively seeking private equity money and investment. Now,
which by the way, let's bookmark that because I want to come back to that. Okay, we're actively seeking. Sorry to interrupt.
So we're actively seeking, and we heard from a panel of firms that have taken private equity investment.
Fascinating.
And they are growing at such a fast pace, and they're challenging each other. I heard the leader of one firm say to the other, spotlight's on us. Yeah. And they are determined to succeed, but they are creating new types of firms. And let's come back to that.
Yeah, let's come back to that. And
the other camp is fiercely independent.
Yes.
Like, nope. We are not going there. We're going to continue to grow on our own. We're going to stay independent. We don't need their investment. And it's interesting when you look at those firms, most of them who are saying we're fiercely independent are also saying we don't need them. And the reason they're saying we don't need them, and I've probed many of them where, tell me what your partner base looks like. What's your retirement plan look like? What is your recruitment plan? Trying to look at the different stages and elements of their businesses and understand why they think they have enough money and the cash flow and equity to pursue growth without outside investment, without that PE money.
And because they're accountants, what I loved hearing in the room was everyone could tell you down to the, to the hundredth, how much growth they were getting organically and how much growth they're generating through acquisitions.
Absolutely.
And they talk about those two numbers. So if anybody out there assuming, well, of course they're growing with private equity money because they're doing a roll up. Nay. And let's talk. Man, it was so fun, such a fun event.
Yeah, and the roll-ups, so we've seen the acquisition activity in accounting extremely active
Yes.
for years now. I mean, I have one client who's done 9 acquisitions
Yeah.
in the course of about 12 years.
That's a
You think about that. It was
lot of
fast
integration.
pace. And I must say, we worked with them. We had the process down pat. So the integration process, all that. There are others that are just now starting. We have another client. They're on their 3rd acquisition and they've just started, but that's 3 acquisitions in about 2 years. And that's been the MO for that industry for quite a number of years. Acquire smaller firms
Acquire growth.
or
Yeah.
merge up.
Yep.
So sizable firm, not able to grow as fast as they wanted to. Maybe they were missing some types of services or not strong enough bench strength, not the bench strength in particular service lines. And they and they were acquired by bigger firms. I mean, we've seen BDO has been on an
Yep.
acquisition strategy. UHY has been on acquisitions, and other firms have been, on that big acquisition path of acquiring
With them and
sizable
Eisner
firms.
and yeah.
Yeah, Eisner,
Markham was just
acquiring,
yeah.
yeah, sizable with Flea, sizable firms. And so those sizable firms are merging, what they call merging up. And that's been, great. And obviously you get the big bump from the merger and acquisition, but that's not enough.
But
That's not enough.
let's talk about that. And you can see me smiling, man. Let's talk about
because
that.
now your overhead is bigger. You have more people. You have more infrastructure needs. You have a need to grow dramatically and continue that.
Yeah.
You also have client service needs. You have 8 more HR needs. You have more.
Let's
needs.
talk about those client service needs, Christine, because what we're seeing, and I'd love to pick your brain and hear your perspective on alternative practice structures, and what private equity. So, guys and gals, ladies and gentlemen, your assumptions about private equity, the caricature that we have, is of course founded in reality, but it is a caricature. You were talking about highly sophisticated, very, very smart people competing against each other. And so the model is evolving incredibly rapidly. And let's get into that in a sec. I'd love to focus for a couple of minutes on the separation of church and state. And
so, what happens, just again, highlight, I won't go into a lot of detail on this because it is quite complex. But basically, they have to assume an alternative practice structure, APS.
APS, yep.
And that means you have to separate the audit and the test services from tax and advisory.
And for the uninitiated, why is that?
So 2 entities. So the requirement is those doing audit and attest services, those structures doing audit and attest services must be majority owned by CPAs, licensed CPAs. So you can't have a and these are partnerships, so the partners must be
CPAs.
Vast majority, and it varies a little bit from state to state, but must be CPAs, period. And so that's in one entity. The other entity is tax and advisory services or consulting services. Now, what most people don't know is you do not have to be a CPA to provide tax services.
Correct. Yep.
Nor, obviously, do you have to be a CPA to provide advisory services. Big growth areas for CPA firms, particularly the advisory practice. Now, in those 2 entities, audit and attest and tax and advisory, under this APS, alternative practice structure, the private equity is investing in the tax and advisory side only.
Heck, yes.
Now, they might retain the partners of the firm might retain some ownership, and it varies. The deals are varying from firm to firm, obviously. But in the audit and attest side, for the most part, there might be a few exceptions out there, but they are either not investing any like zero
Zero.
in those sides, or extremely little. Now, they're also setting up where the alternative practice structures, the audit and the test side, has no employees, no assets. It is a structure that provides the services, through basically leased employees from the tax and advisory side, and a service level agreement, an SLA, back and forth. Yes, they're marketed under the same thing, but I think it leads the question, George, and you and I were talking about this last week, is that, okay, where is the investment going to be going forward?
Where and importantly, why? Why?
Why?
This is the key takeaway. Yeah.
And so if they're investing in the tax and advisory side, they being the private equity firms, and the firms themselves are investing in the tax and advisory side, where does that leave audit and attest? So are they looking at growing those firms that have taken in those sectors or those service lines in firms that have taken private equity investment? Or could they be spun out? And then could somebody else, a big firm who does have significant test and audit practice areas, come in and buy those audit and attest?
Yeah, because
groups,
that's not
those
going away. It's just not growing.
not going away, but there's a lot of risk. There is a higher risk than the other service lines, just from a business perspective. And even though the PE firms aren't investing in that sector, where does it lead? Now, when I talk to the private equity investors and the CEOs of these firms and talk to them about, which I've asked them about the audit and the test side, they will say, still an important part. We're going to support it.
Yes.
But they have a little skin in the game because of the SLAs, but they don't have a lot of skin in the game. They don't own that. So are they really going to continue, particularly if the advisory side starts growing like this?
Well, and this is why we're together. It's just struck me that we didn't really talk about why the heck was George in San Diego in Christine's booth. Christine, you're a strategist, and Growth Drive provides a proven successful turnkey, technology-enabled advisory system. Advisory system. And if you want to get pros up and running fast, Growth Drive is a great way. I would say the great way, but a great way to get there. This week's episode is brought to you by Growth Drive and the C3D certification. If you're looking to expand your reach and relevance with business-owning clients, whether you're a business advisor or a wealth advisor, this is a certification for you. And after completing it, you will understand how to make profits and transferable value M&A price actionable, how to maximize results for your clients. So get the details at growthdrive.com/C3D. Scan the QR code, register. Listen, this is the path to building a thriving advisory business based on delivering client wins.
Absolutely. Because the advisory side, George, what's happening is the traditional services, if you will, in the advisory side of CPA firms or accounting firms now, as we should call them, is bookkeeping, outsourced controller, CFO, fractional CFO, controller services, other types of estate planning, some are dabbling in exit planning, not fully embraced it yet.
Sure.
And services like that, more business-oriented services. There's a few that are doing strategic planning with their clients, but a lot of them have introduced what's called a CAS practice, client accounting and advisory services. And it's outsourced accounting, sometimes commonly called bookkeeping, but it's more than that. And as I mentioned, the fractional controller, fractional CFO kind of services, which matches perfectly with their skill set.
100%. And it's important for the uninitiated to understand. And one of the things that, he said self-congratulatorily, that our software surfaces are bookkeeping opportunities and controller opportunities, and that strategic financial advice which is the fractional CFO services. Those are three different services. Bookkeeping and controller are much more closely aligned. The CFO is a strategic role, and you're helping your client not just improve things like profitability, but to increase profits, to increase revenue, and firms are leaning in.
Absolutely. But there's more, you know,
And wait,
those
yes, there's more.
clients need more. They
Yes.
need more help. They need more input. And the accounting firm, particularly those doing those CAS services, as you just mentioned, are in a beautiful position, a unique and powerful position to expand. Because the other thing that's happening in just business in general is a lot of M&A activity.
Yes.
Not just in accounting, as we talked about, but in general. A lot of baby boomers own businesses. A lot of younger people own businesses, have started businesses or bought businesses. They built it up. Now they're ready for the next phase, or they are ready to wind down and they want to sell that business.
Sure.
And if you look then just kind of backing that up a little bit at how much value, how much wealth the typical business owner has tied up into their business, it's an enormous amount of wealth that's tied up. So they're depending upon that business for their future, for their family's future, for their children and grandchildren's future. And yet, you look further, kind of take another layer off, peel another layer away, and the value of existing businesses often fails to achieve the desired goal or the needed goal of these business owners. So the money that they need out of it to extract out of that
Transferable value. Yeah.
is exactly that transferable value is lower, and in some cases a lot lower than what they need to achieve their financial goals.
Yes.
Or even in some cases to live in a decent manner, a decent lifestyle post transaction.
And yes.
And that's where growth drive comes in. So, again, you take that they're already doing these outsourced accounting services, controller and bookkeeping, fractional CFO, which is more strategic. It's perfectly aligned. And you add into that, the tax and maybe the estate planning, those types of things. They're already on the edges, if not a little bit deeper, of conversations about the value, the transferable value of these businesses. They're already there.
And Christine is spot on. And a guy that I admire a lot, Richard Kopelman, who's growing Aprio by leaps and bounds. He did a talk, and he had up on the board the one thing, his one differentiator for Aprio, which is doing some enviable and really cool things, was grow enterprise value. Right? Aprio, we focus on growing enterprise value. And when these firms get that and start driving that down in how they service their client, who better than the accountant? If we think about who can pick up a set of wrenches and work on the engine, who better than an accounting professional? I won't say accountant, but someone, what all of those business owners have in common is they have a CPA. And you're either going to increase your relevance with your business owning clients or prepare to be disrupted. Prepare for boarding. But there's someone who's going to have this conversation with your clients, because the conversation is going to happen. And the earlier you educate your client about their strategic capacity, the value of the asset they've created, and their inability to monetize generally all, right? It's like, well, we can say the value gap is $12 million, but the reality is you can't go to market at all. So your value gap is actually 30 million.
Yeah, exactly.
And let's talk about strategies we can push into the clients. But I'm getting a little over my skis here.
George, I think it's important to interject here in that even though we've alluded in this conversation about selling businesses, the beauty of taking a look at those value gaps and driving enterprise value, growth drive,
Mhm.
is that many business owners end up with alternatives that they've never thought were possible.
Yes.
So it doesn't necessarily end in a sale.
It doesn't need to. No.
It doesn't need to. Now, as a business owner, once you go through and your accounting professional helps you see the paths and shore up these areas that are reducing value, you have alternatives. And that's what the beauty of this
Yeah,
is.
this is yeah, you're in the options creation game. Right. Yes.
And that's a beautiful way of saying it. It's just like spot on. Because that's why so many businesses sell in, what you and I might call a fire sale. They're in a have to position.
Yes.
I have to sell for one reason or another. Sometimes it is their health. Sometimes it's just age. Sometimes it's a spouse's health. Sometimes it's a partnership issue. They're forced to sell, divorce,
Yeah, more
maybe.
than half the time it's
Yeah,
unplanned.
it's unplanned. They're forced. In the general business world, we call that a fire sale, right? You have to dispose of this asset, period.
And if you are
Now,
not ready for that, it does not need to be a fire sale. That's
right.
the thing. With
Yeah.
some straightforward, we're not talking anyhow.
Oh,
I'm sorry.
exactly. And it's so much value lost
Yes.
in that. And the new owner, whoever, now some of those cannot sell.
They just can't. That's right.
So they simply close the doors and they're out of business. I got a
Which is a
notice. I've
horrible,
gotten 2 notices this week of companies that just
horrible,
closed their doors, period. They
horrible.
didn't have anything to sell.
All those jobs going away, all of that value, the life's work
Right.
that could have been, more often than not can be.
And then you look again, you tie it back together and you say, here's what's happening. They need help. There's this enterprise value, this value gap that's happening in the marketplace. And you have the accounting firms right on the cusp of having deeper conversations.
Well, and can I interject for a sec, Christine? I'm
Absolutely.
sorry to interrupt, but
No.
here's the thing: we talking about value, ladies and gentlemen. Stop and think about what causes growing enterprise value. What causes growing enterprise value? What do the private capital markets value? They value a business that can predictably and sustainably grow free cash flow, right? Predictably and sustainably, low risk, growing
Right.
FCF. You're talking about a bulletproof ATM.
And I
That's
would
what we're talking
interject,
about.
George, without the owner.
Without, oh my gosh, it has to be without the owner,
You know,
which that's another topic I want to talk about.
but
Yeah, heck yeah,
without the owner.
without
And
the
you
owner.
see, and we're not talking mom and pop businesses here. We're not talking the
We're talking about
$100,000 a year revenue business. It's a little
pre-middle
hobby
market and middle
business or a
market. Yeah,
lifestyle. We're talking about businesses that from the outside looking in, from the outside perspective, the client perspective, they're sophisticated businesses.
yeah, and probably delivering a very nice lifestyle.
Oh, yeah.
That doesn't mean it's
And
valuable. Yeah.
right. But that doesn't mean it's valuable to someone else.
What? And
However it's structured right then is working for those that are working in there. They're employing people, they're serving their clients, they're doing good work. The owner and maybe the part of the owner's family or many of them are having a great lifestyle,
great lifestyle.
earning great money.
Yep.
And from the outside looking in, this 20, 40, 50 million, $60 million revenue business, maybe even bigger, seems like it has everything together. And then when they go through that due diligence process, so they come time to sell, maybe they're forced to sell, or maybe they go, okay, time, let's go through the process. And they go through due diligence and the buyer looks at it. They're looking at what am I buying?
Yeah.
Do I have a good management team? What about the sales process? What about the legal aspect of things? What about the contracts? They go through all these different areas of a business. It's not just top line revenue or even
Oh my gosh.
net income.
Due
It's
diligence.
way
Look at
beyond that.
pull a due diligence checklist and look
Yeah.
at how deeply it goes.
Yeah. And that's where value just deteriorates.
Yeah, because risk is rewarded with discounts.
Right.
And
That's
too much risk is
absolutely
rewarded with a thanks, but no thank you.
right.
And owner dependence is, I'm stating the obvious, owner dependence is, I'm not buying your job, my friend. I want to
Right.
buy your business. Hey, let's talk about how this is playing out in firms, because we heard a number of private equity models, but they had things in common. And one of my biggest takeaways would be that when we get the fastest growing firms up, and I won't use last names, but we get Tim and Jeff and Robert up, either on the stage or in one-on-ones talking about this, they have a vision, they have a mission, they have a strategic plan. They are willing to burn the boats. Yes, you knew that I
Yes.
was going to say it during a CPA conversation. They've been willing to burn the boats. So by changing their legal equity sharing
Right.
further down into the ranks, which empowers their people, you don't have to become a partner to share in the good that's going on here. We're going to push this down, my perspective, ideally all the way to the shop floor, right? But
Right.
we're going to start distributing equity in some form or a share in the win.
Right.
Those things, every single firm there shared that they had decided they're like, we don't care what the world looked like. We
Right.
understand it's a brave new world, and we are changing, not just willing to change, we are changing to dominate in
Right.
our space. Heck
And
yeah.
not only that, not only are they changing this structure, but they are changing at a fast pace
A crazy pace.
what the traditional culture of an accounting firm had been.
Yep.
And I started my career at Grant Thornton. I went from there to PwC in regional, had a regional position there, 5 states, 15 offices. I went from there to director of marketing at a little firm called KPMG.
May have heard of it.
And they maybe heard of them. And then started my own firm to work in the middle market space. And it's faster. I must say, it's faster than what I experienced at the big firms. Some of that's changed with many of those big firms, though. And that it was a really rough industry. And by rough, I mean people worked
Heck yes.
enormous hours year round. Busy season, tax season was like double, triple the amount of hours they normally worked. People were exhausted. People were working just almost 24. That was the norm. And then we had the younger generations coming in, and they're like, well, I don't want to, I want to be with my family. I want something different. I want to enjoy my friends. I want to stay athletic. I want to have outside interests. I want to do volunteer work.
In a world where MBAs from Ivy League schools are refusing jobs with Bain and BCG, et cetera, because of that exact factor.
Right.
Imagine how that appears to a graduate when you're talking about accounting. It's like,
Right.
wow. And then I don't even get to participate.
Right. And the PE firms have come in, and many other big firms have said, we have to change the culture.
Yes.
We need to get with the times, honestly.
Yes.
And change the way we view busy season, the way we view expectations, the way we view remote work, the way we view in office. I have to lay eyes on you. To this day, I still talk with partners who are 50 plus, who have this mindset. They need to be able to shake hands with the person physically,
Yep.
have them sit in their office in order to convince themselves they're doing work.
Yeah.
And the technology that they're adopting it doesn't support that anymore.
Yeah.
It's people can work remotely. We still have this high level of security. That's not it. There's still, it's compliant with the security requirements when you're dealing with people's private information, social security numbers, their own personal income and numbers and tax returns and things that cannot get out in the public market, right? And we're seeing, and we have seen this kind of over a number of years, where AI is impacting
Heck yes.
the industry. And matter of fact, I'm just about finished with my AI prompting certification. And in the course this week, these are people from all over and all walks of life, and business owners, CEOs, CIOs, CTOs, you name it, see everything, CFOs that are taking this course. And it's higher level executives that are in this certification course. And the conversation started about AI replacing what a tax preparer, a tax accountant does, like its impact. And we were predicting, where is AI? The conversation was about predicting where AI is going to take certain industries. And of course, accounting came up. And the comment was made about, and supporting statements made about, the prediction being that it will impact how taxes are done. And,
In a
it kind of makes
world with a
sense.
27,000 page, what is it, 94,000 pages in total
It's,
of laws, regs, and opinions?
yeah,
How can a human cannot possibly? You have
right,
to go to machine learning. Now you have to go to a
right.
machine, right?
Well,
And
that's
we're
a
all using
totally
machines
different,
anyhow. That's the
no, that's a totally different topic.
it is.
But if getting back to this growth concept and what we saw at the Accounting Today Firm Growth Forum, the growth is a big issue. How are we going to get there? How do we
Yes.
expand enterprise value? Do we stay independent? Do we accept private equity investment? Where are we going to grow our firms? And they're looking outward. They really
They
are.
really are for the first
Look
for the,
really in a big way. There have been a few leaders, like if we looked at the bell curve, there have been those few innovators that were looking forward for a while now. And now we're kind of at that majority of the bell curve, okay? Where many firms, most firms, in fact, I think are saying, okay, we need to be more for our clients. We have the skill set, we have the people, we have the ability, we have the flexibility, we have the organizational structure now, if they've adopted an APS, to expand. How can we further help our clients? What's happening?
yes.
And they're looking at value growth, growth drive, expanding enterprise value,
Yes.
working with business owners, and they're on building and expanding and improving their businesses. And when you think about it, just again, me, I like to go deep dive, and then I like to come back and go, okay, what does this mean? Does this make sense for the world in which we live? Well, yes. I mean, what does that mean when we improve business value and we make bigger, better, faster, more efficient, more effective, more valuable businesses? Job creation.
Yes, ma'am.
Job creation. Like, yeah,
100%.
people have better jobs. There are more jobs. They're in organizations that are run more efficiently and effectively.
Yes.
And there are more opportunities there. And depending upon where they are, it has a big impact on our US economy.
That's exactly right,
And
Christine.
and it has impacts in many instances. It has impacts on these smaller communities.
Communities, heck yes. The communities in which these businesses exist.
Yeah.
Yeah.
And there's story after story about these companies that have gone out of business and, their role within that community, and quite the opposite. Those that have really understood how to build enterprise value and how to build solid companies, sustainable
Sustainable.
companies, and the impact it's had on those communities, and generations of people work within families. Generations of people work at that same company because they've seen their grandparents, their parents, their siblings, their join that company, have many opportunities, be well taken care of, enjoy their work, being able to expand their skill sets,
Sure.
and it's a win-win. It
Private
really is
business
a
is the
win-win.
engine for the pursuit of happiness. There is no
Absolutely.
other, and I'm not going to get on that soapbox, but you're absolutely right. And you know that, and this is one of the things, one of the many reasons we get along so well. I couldn't agree. I'm in violent agreement, and that. So accounting, by the way, that we call them firms, they are businesses, right? So
Right.
accounting businesses enjoy the same benefits. I'll get back to Mr. Kopelman of maximizing their enterprise value when they help clients maximize the client's enterprise. It is a virtuous circle that benefits, and the communities in which CPAs do have incredibly intelligent, hardworking, good people, right, that have traditionally had a profound beneficial impact on their communities, and now have an opportunity to
Good.
expand that
The
impact.
And the beauty of it is, without adding staff, without adding different types of skill sets, accounting firms today, particularly those who are providing those CAS services, the outsourced accounting, the outsourced controller, fractional
Yes.
controller, fractional CFO, those types of services, and those that are even not, weighted too deeply into that, who are providing tax services, they can take their same team members and learn the growth drive concept, the
Yes.
methodology, learn how to use the tools, and implement it easily within their organizations today. That's the beauty of it. This is not, I've got to rejigger my entire team. I've got to teach them all new skills. I've got to hire new people. This is not a big, massive upheaval. This is expanding upon what you have and what you are already doing, and taking the conversations to a different level and leveraging tools to do so.
Yeah, and if you're a private, if you're working with private equity, you need, you're going to need to grow to keep the machine satisfied, right? And
Right.
we could have an entire additional conversation about what private equity is doing. And if you're not taking private equity money, great, fantastic, good for you.
Yeah.
But
But
that's you are competing against major league players, and you better
right.
get major league in your
Exactly.
in your abilities.
It means you have to think about your firm differently, and you need to think about how to serve your clients differently.
And not all,
That's what
and
this
no
is
two
all about.
firms are the same, by the way,
Right.
which is why, a strategy, a well thought out, carefully crafted strategy is vitally important.
Right.
And it's better to understand what you're putting a line through than to do it by default. And if you're like, we don't want to
Absolutely.
provide that service, let's look at it, analyze it, and actively decide we are not going to do it, rather than, hey, I never thought of that,
Yeah.
or the fear of change. And those firms can't be helped.
And George, I know we have both reached our time limit
We
here.
have. I was about to point
And
that out. Yep.
you know how excited I get about this topic. You know how passionate I am,
Yeah.
as well as you are,
Same. Yeah.
about the change in the accounting industry that's happening,
It's a
and the
revolution. Yeah.
opportunities
Yes.
that this means.
Yes.
This is opportunity through and through. And it is so very
It's
exciting.
super exciting. Yeah.
And we have some demos that we can do. So anybody listening
Yep.
to this, if you want to see what a system looks like, we are happy to give you a demo and show you what this means, and show you what it looks like and what the tools look like at any time. Just takes a few minutes,
Sure.
20, 30 minutes, give you an insight, look at it. And we can do level 1 of growth drive of using the clarity tool for these CPA firms,
For
for
the
these
firm
accounting
itself.
firms
Yeah.
themselves. And it gives them a real insight into what this is about and the power it has.
Yeah, it's funny. I gave a demo, as you know, you were standing right there. I gave a demo on an iPad on the
Yeah.
on the show floor, and the partner was quite pleased. It's like,
Eye-opening.
it's
And they had to answer the questions, and they had to really examine their firm, and they answered the questions one, they experienced what a client would experience. And two, it gave them insights into their firm that on actionable items immediately. And that's the beauty of it. This is not wishful thinking. This is action. And you know how much I love that.
Absolutely. You're able to say, using technology, you're able to say to your client, hey, listen, let's have this conversation. I'd love to get a better understanding of your business holistically. Let's have a conversation. I'll generate a report, which is yours. And, if you have questions about it, you want to do anything, this is not a full court press. This is a very low key, hey, I'm going to educate you about the bottlenecks to predictably and sustainably growing free cash flow.
Right.
And yes. Yeah. So, well, you're right. Our
Yes.
half-hour conversation has gone for 54 minutes, and I love it, man. We could keep going all day.
It's exciting. Well, I hope that we have another opportunity to talk. Thank you so much for having me on.
Thanks for being on, Christine.
It is exciting, and I must say to everyone, every time George and I have a conversation about just about any topic, we get, especially when we touch on things that we're both passionate about, it is always, in my opinion, an exciting conversation and fascinating. And the banter and the thought process and the thinking is just something that truly excites me. So thank you for having me on today.
Yeah. Thank you very much, Christine. It's great to have you, and I'll see you in Vegas.
Perfect.
All right. Awesome. Thank you. This episode is brought to you by the Growth Drive Summit. Our theme this year is building a profitable advisory business. Join us in Charleston, South Carolina, October 6th, 7th, and 8th. Expand your network, learn new skills, and generally have a good time. This is a top-rated event. We're looking forward to seeing you there. Thank you. Hi, this is George. Thanks for listening. If you like what you heard, you can subscribe, like, and please take 2 seconds to leave a review. It tells the world that you like what we're doing, and it helps us understand how we can improve the show. Thank you, and see you next time.